Let's start with a fundamental question. What is banking? Simply put, they are entities that provide financial services to both individuals and businesses. Think of them as the middlemen, the connectors between savers who have extra funds and borrowers who need capital. They are the conduits through which money flows within our economy, facilitating growth and prosperity. Now, you'll hear me and others refer to banks as financial institutions. Think of financial institutions as a description for a range of organizations providing financial services. And I'll get into what this means shortly in this lecture. I like to think of banks as the Swiss Army knives of the financial world. They offer a plethora of services, each designed to meet different needs. So while all banks are financial institutions, not all financial institutions are banks. Banks are a subset of the financial institution universe, providing a focus on deposits and lending. They handle your everyday banking needs, but they don't cover the full spectrum. Other financial institutions may specialize in areas like investment, insurance, or asset management, offering a broader range of services. So let's break this down into functions that banks provide. Firstly, they offer depository services where these institutions accept deposits from the public and provide a safe place for their funds. This service ensures that your money is not just sitting idle, but is safeguarded and accessible when needed, and also earning interest for customers. Next, lending services are important. Institutions offer a variety of loans, from personal and mortgage loans right through to business loans, enabling people and businesses to invest, grow, and thrive. This lending activity fuels economic expansion by making capital available where it's most needed. Then there's payment processing. In our fast-paced digital age, the ability to process transactions efficiently is important. Financial institutions enable this through checks, through credit and debit cards, and electronic transfers, making sure your money moves securely and swiftly. Financial advisory services offer guidance on investments, estate planning, and other financial matters. This helps individuals and businesses make informed decisions that align with their financial goals. And lastly, risk management. Risk management is a pillar of financial services, providing insurance products that protect against unexpected financial setbacks. It's about offering peace of mind and stability in an unpredictable world. Now, some interesting statistics on banking. I'm not expecting you to remember any of these. They just help paint the picture of how big banking is globally. The two key statistics I want to highlight are there are around 25,000 banks globally. It's a massive industry at a global level. And this means at the time of recording, this translates to around $170 trillion in funds under management. It's enormous. And there are around 27 million people globally working in banking. If I contextualize this, that's more than the population of my country, Australia, or a country like Taiwan. To say it's enormous as an industry is an understatement. What role do banks play in our economy? Let's zero in on banks and their pivotal role in our economy. Banks are the arteries of our financial system, ensuring that money flows where it needs to go. This means facilitating payments. Banks provide the infrastructure that allows individuals and businesses to conduct transactions efficiently and securely. Whether you're buying a cup of coffee or closing a business deal, banks manage the clearing and settlement systems that make these transactions possible. Providing credit. Banks are the lifeblood of credit in our economy. They offer loans to individuals and businesses, enabling them to buy homes, expand their business operations, and invest in the future. This credit provision supports economic growth, allowing consumers to spend and businesses to innovate, creating money. Through fractional reserve banking, Banks create money by lending out a portion of the deposits they hold. This expands the money supply and stimulates economic activity, fueling growth and development. Risk management. Banks help manage financial risks by offering products like savings accounts and insurance. They provide a buffer against economic shocks, ensuring financial stability for their customers. Economic stability. Banks are guardians of economic stability. They implement prudent lending practices, ensuring the solvency and liquidity of financial systems. Central banks like the Federal Reserve, or the Fed Reserve, as is affectionately known, use banks to implement monetary policy, influencing interest rates and controlling inflation. So what types of financial institutions are there? I introduced the concept of financial institutions a little earlier. Let's revisit financial institutions and, in particular, some of the types of financial institutions that exist. You've got high street or main street banks. These are the go-to institutions for deposits, loans, and everyday banking services. So you can think of these banks as high street banks, as we call them in the Commonwealth, or in the USA, they are known as main street banks. They target retail customers along with business customers and other products tailored to these customer segments and the unique characteristics each segment has. You'll find these banks are referred to as retail banks as well as commercial banks. Names like JP Morgan Chase, Wells Fargo, ICBC, Emirates NDB, and HSBC fall into this category. You've got investment banks. These banks are experts in raising capital and providing advisory services for complex financial transactions. Names like UBS, Goldman Sachs, Deutsche Bank, and BNP are well known here. We'll be exploring commercial banks and investment banks along with central banks a little later in the course. There are credit unions. These are member-focused institutions offering competitive rates and personalized services. Insurance companies. These institutions provide risk management through insurance products. You've got brokerages. Brokerages play an important role in the financial markets by acting as intermediaries between buyers and sellers of securities, such as stocks, bonds, and other financial instruments. And last of all, asset management firms. Asset managers are specialists in managing investments to grow wealth for their clients. These clients can range from individual investors and families to large institutions like pension funds, insurance companies, and corporations. Don't forget to like, subscribe, and hit the notification bell so you never miss an update. And if you want to learn more about banking or a wide range of topics in business and technology, then make sure to check out the links you'll find below in the description for a range of courses that I offer. And if you're on LinkedIn, make sure to connect with me.